Hey, what's going on, everybody? It's Matthew Nickerson. I'm talking about whales and selling off in crypto. If you are brand new to crypto and you're just getting into it and you're becoming that enthusiast, this is a key point that you need to understand and realize. So, what is a whale? A whale is anybody who has a large amount of crypto. So, let's say in Bitcoin terms, it would be somebody that owns 10,000 or more Bitcoin and somebody with a lot of ETH or a lot of concentrating one token. Now, how does this involve you? So if you're new to the space, one of the biggest mistakes that people make is they invest large amounts at a specific time and then see a lot of volatility and drawback from investors. So, for example, I'll put it to you in two different concepts. If I'm a Bitcoin investor and I'm a venture capitalist, I have a lot of money and I put $100 million, let's say at 20,000, and I have thousands of Bitcoin that I've acquired, right? I can then wait till it goes up to 40,000 and sell off and then watch people have fear and start selling their coins too because it's dropping and they're new to this space and they're not used to long-term holding and they're not used to the volatility. So what ends up happening is those investors that got in at 20, sold off at 40, will wait to draw it down for you to go and sell your coins, and then they'll buy it back at 30,000 and let it run up again. So now they've acquired more coins during this process, and they've done it because they've scared the markets into being fearful and selling off. This is a big newbie mistake in cryptocurrency that happens. It would be like if Warren Buffett owned, let's say, made up 50% of Coca-Cola. And then all of a sudden, one day, he just sold off 40% of all of the Coca-Cola shares. It would cause a panic in the marketplace, and people might think, maybe I need to get out of this because this doesn't seem as steady and stable as I wanted it to be. And then they sell off their shares. What he'll end up doing is buying those people's shares off of them as the price goes down and then letting the price of each share come back. So it's a little bit of market manipulation. And if you're new in this space, you'll see these drawdowns that occur because of whales selling. So be very conscious during these times of a sell-off and understand when you're looking at the metrics and the charts of crypto that some of these large dips are, on purpose. And there are people that are purposely doing that to try to see if people will sell. And they'll end up buying things back at a cheaper price and wait it out for the long term. These are generally long-term investors, but they use this whale sell-off strategy to try to get the market shook up, and then they'll come back and buy all of the coins back. And they'll go from owning 10,000 coins to now 15,000 coins, and they did it at your expense. So be very mindful of whale sell-offs and be very careful of this volatility that we're experiencing. Again, I'm not a money manager, I'm not a financial advisor, but I'm somebody that's been in the crypto space now for years, and I'm telling people not to get wrecked in this process, especially retail investors who are putting their hard-earned money into this and then basically selling off at a loss because they're nervous. They've never been through this before. If you like this content, like, share, and subscribe, and let me know what your thoughts are on this topic exactly. Thanks. Bye.